Hello, my name is Jonathan Hocker, and today we'll be talking about market recognition analysis of Duke Energy on the stock market. Today's presentation will start with an overview of Duke Energy, the COVID-19 effect, correlation analysis, whale tracks, support resistant levels, Bollinger Bands, buy, sell, or hold, and then finish up with the future of the stock. On the New York Stock Exchange, Duke Energy's symbol is DUK. It is an energy company with three segments: electrical utilities and infrastructure, gas utilities and infrastructure, and commercial renewables. Heading into 2020, the Duke Energy stock had a positive outlook since a dip in November 2019, but has been steadily rising since then. Unfortunately, COVID-19, also known as the coronavirus, has been sweeping the globe and has been affecting people and businesses all around. The effect this pandemic is having on businesses is catastrophic. Stocks of businesses in all industries have seen drastic drops as of late. As a result, forecasting how stocks will do in the near future is pretty uncertain. However, trends can still be found leading up to the recent events. When looking for correlation on how a stock is doing, there are two primary indicators: price and volume. In addition to these primary indicators, there are additional secondary indicators which generally derive from price and volume being used in some way. These are advance and decline lines, short-term overbought, moving volume average, and highs and lows. The first visual shown is the quarterly stock prices versus median volume of Duke Energy over the past 5 years. As you can see from the visual, there is very little to no correlation on how the stock price is doing compared to the volume that is being moved. There is some resemblance that as the volume goes down, the price goes up, but this is not consistent across the board. This second visual is the moving volume average, which is looking at the daily stock price since March 2019 compared to the closing price. There is some correlation that as the moving volume average goes down, the closing price goes up. However, this is not fully consistent, as you can see from a late November into December of 2019 where there's a huge spike, and then once we hit into 2020 and COVID-19 takes effect, everything is all over the place. As a result, it is difficult to say that there are strong indicators for the stock price based on the data. The 5-year analysis has weak correlation and the moving volume average has moderate correlation, but COVID-19 has heavily affected stocks since the beginning of 2020. Stocks have been all over the place, and patterns and trends being formed are under special circumstances. Whales are big money players in the stock market. They generally seek to accumulate 500,000 or more stocks in a single company. This is done over time to not attract attention, hence whale tracks. They take significant stakes in companies to reap the largest benefit, which is generally in small and mid-cap companies. Whale tracks can be potentially seen by tracking volume of a stock along with the volume difference of the stock from the prior day. As you can see from the visual, there are some spikes in July, October, December, and the beginning of January where this could potentially have been whales buying into the stock. Along with the volume of the stock, looking at closing price along with closing price difference can be an indicator for whale tracks. As shown from the visual on the screen, in March 2020, there are large changes in the closing price difference which can be an indicator for whales. This next visual is from TradingView.com, which has a special built-in whale tracker so people can track a stock and where potential whales can be buying and selling. As shown from the visual, you can see in November and the beginning of March where whales were buying into the Duke Energy stock. When we looked at both volume of stock and closing price, we were able to also indicate that November and March were potential times for whale tracks. When looking at stocks, there are support and resistant levels. A support level is a boundary that a stock does not dip below despite getting close to it over a period of time. On the opposite end, resistance is a boundary that a stock price does not exceed past despite getting close to it over a period of time. If you look at the closing price for Duke Energy between April 2019 to August 2019, the stock does not drop below 85, the support line, and never exceeds 92, which is the resistance level, until late August. Since this point, the stock has been sporadic and does not have a clear support or resistance level that has been established. This next visual just shows the support and resistance level timeline in a different view. You can see from the visual that the stock never drops below 85.5, but never exceeds 91.5 until the late August time where it breaks the 92 resistance level. Bollinger Bands is a technical analysis tool to assist with stock decisions. It is typically comprised of 3 lines or bands. The middle band is the simple moving average, also referred to as SMA, which is generally the closing price average over an end time period. In this case, we are using 23 days. The remaining 2 bands are the upper band and the lower band. which is the simple moving average plus 2 standard deviations for the upper band and minus 2 standard deviations for the lower band. The table visual on the screen shows the 4 components being looked at: the simple moving average, the lower band, the upper band, and the closing price. These are separated by the months being looked at over the past year and showcase the minimum, maximum, and median of each of the 4 components. The visual on the screen is a line chart view of the Bollinger Bands from day 24 to day 253. Since the simple moving average needs 23 days in order to start evaluating, the timeline starts on day 24. When looking at the visual, narrower bands means that the stock was less volatile, and wider bands means that it was more volatile. As you can see, over the past year, the Duke Energy stock has been pretty narrow up until 2020 in late January, where it started to widen and is very wide as at the moment. With all that said, what should someone interested in Duke Energy stock do at the moment? The current recommendation for interested parties is to buy the stock. With the current COVID-19 pandemic, stock prices will more than likely continue to drop, and buying in will be beneficial in the long term. As of March 20, 2020, the Duke Energy stock has fallen under $70, where 3 weeks ago at the beginning of March it was over $100. Based on the data, once the pandemic is over and the stock market stabilizes again, Duke Energy will regain the ground lost, and those who decide to buy in will see reasonable gains. For anyone who has bought Duke Energy stock or is going to buy stock, they should be looking at the projected forecast of how the stock should do. Currently, the projected forecast has the stock sitting around $80 in a month. However, with COVID-19 most likely still being an issue, the lower band, which is $68, is more likely. It is most likely best to look into investing into the stock in a long-term deal rather than short-term with the pandemic going on. The projected forecast for the next year also has the stock sitting around $80. However, with COVID-19 most likely fading away by that time, the stock should return to a normal, so this is likely that it will reach back up to the $100 range and possibly towards the upper band of $115. Bringing everything together, COVID-19 has heavily affected the stock market as a whole. There has been very little indication on what determines the Duke Energy stock price, looking at both 1-year and 5-year analysis. However, whale tracks can be found through volume and closing price analysis. We were able to find that there was a support and resistance level that existed for about half a year for Duke Energy in 2019. Bollinger Bands assisted with the conclusion to buy into the Duke Energy stock right now. Choosing to buy in right now is not for the short-term future, which is very uncertain due to COVID-19, but for the long term where the market stabilizes again and the Duke Energy stock price rises back to where it was and above and beyond. Thank you for your time. This concludes the presentation.